Everybody, welcome to Statement of Cash Flows, Part 2, a simple example. So my disclaimer and copyright note is the information and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to the Orange County Community College District, the South Orange County Community College District and Irvine Valley College. This presentation is for educational purposes only. It does not constitute any legal or advice or accounting advice whatsoever. This presentation is copyright 2008 to 2023 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. So let's go through and talk about a simplified cash flow example. But before we get there, let's quickly talk about how we're going to go through and learn cash flows. So when we have a cash flow question, typically what's going to happen is we're going to see two balance sheets. And what we're going to go through and do is we're going to go ahead and set up that skeleton. So here's our problem right over here. We basically have cash as of 2019 and 2020. Our cash went from 250 to 550, right? So what we're going to try to figure out and do is how did that increase happen? So let's come over here. Let's go to our very first question and let's go from here. So one of the things that I want to do with you is just as a kind of reminder is using T accounts. This is extremely important, right? We have our balance sheet, AELOE, assets equals liabilities plus owner's equity, right? So assets will typically have debit balances, right? This is DC, nation's capital, crazy stuff happens, Washington, debit, credit, Washington, DC. Assets typically have debit balances. They are increased with debits and decreased with credits. Liabilities and equity accounts typically have credit balances. They are increased with credits and decreased with debits. We record expenses generally with debits, revenues generally with credits. So the first thing we're going to go through and do is we're going to create something called the skeleton. What is the skeleton? Well, if we come over here and look at our friends at the Home Depot, right, you'll basically see their statement of cash flows, right? And what you'll see here is they have cash flows from operating activities, investing activities, and financing activities. So, and most importantly, is that we need to figure out what happened to our cash. So let's go ahead and set up our skeleton. So when we're setting up a skeleton, we're being asked to make a statement of cash flows for the year ended 12/31/20 for Panther Inc. So we're going to have Panther Inc. statement of cash flows for the year ended 12/31/20. What we're going to do is we have three sections. We have cash flows from operating activities, total cash blank operating activities, cash flows from investing activities, total cash blank investing activities. Then we're going to have cash flows from financing activities, total cash blank financing activities. When I add up the cash flows from investing, from operating, from investing, and from financing, this is going to give me my total change in cash. Now, for this particular question, right, we know that our total change in cash is going to be how much? Well, cash went from 250 to 550, so cash increased by 300. And we're just going to put right up here before I forget, these are amounts in thousands. Okay, so this is my total change in cash is 300. I'm then going to show my beginning cash balance of 250, and this is going to give me my ending cash balance. We'll call this total increase in cash is 300. plus the beginning gives me an ending of 550. Remember, when I'm doing on the statement of cash flows, I'm just describing what happened to the cash balance. That's what I'm trying to go through and do. The other thing I'm going to write down here, just for our own peace of mind, is something called non-cash transactions. Now, we're not going to be dealing with that right now for this particular problem. This is an easier one, but I'm going to include it here in the skeleton because I'm going to do this every single time I do cash flows. Now, let's talk about really quickly about the different areas in terms of these different sections. Like exactly like what kind of happens in each of these areas, right? So I'm going to start with the bottom first. So cash flows from financing activities. Financing activities refers to how are we going through and financing our business operations. Did we sell bonds or borrow money, right? Did we repurchase our own bonds or repay loans, right? So again, I'm going here. Also, did I sell stock, our own stock, or did we repurchase our own stock? This is known as treasury stock. Okay, so if this is why this is such a great review of all the different chapters, is because as we go through and do this, is that when we look at this, this is just a great review of what we're learning. So also, do we pay any dividends? These are generally the categories you're going to go through and see when we're talking about financing activities, right? So I'm going in reverse. Financing, investing, operating. Let's now go to investing. Cash flows from investing activities. Okay, so for our investing activities is, did we purchase equipment, purchase property, plant, and equipment? So the purchase of property, plant, and equipment is going to, for cash, is going to go in investing activities. Also, you could say the same thing. Did we purchase patents or intellectual property for cash? What else goes in investing? Cash proceeds from the sale of equipment or from PP&E. Do we purchase a business? What else will go into investing? And again, this has to be in cash. I purchase and sale of short-term investments, right? Basically, what was the cash used in the purchase or sale of short-term investments? Cash flows from operating activities is pretty much going to be everything else. And we'll go through and look at that as we're preparing the financial state, or preparing the statement of cash flows. So these are the sections of the cash flows: financing, investing, operating. It's where I'm going in reverse, but just to kind of give you an idea in terms of what goes in. If you are learning cash flows, you have to go through and do the problems over and over again. Why? It's just like everything else in accounting. You are learning a skill. That skill takes practice and repetition. If you don't go through and follow these steps, you're going to be in trouble come exam day. Okay, so we've done our first step right over here. Our first step is basically how are we going to go through and learn it? We set up the skeleton, right? So operating, investing, financing. What you're going to notice here is I'm saying total cash blank investing activities. I will show you momentarily what we do with that particular item. I then have my increase in cash, right? The cash flow statements are fun because they're going to give us the answer, right? So my cash increased by 300. My beginning cash was 250. My ending cash is 550. So I'm going to have down over here any non-cash transactions. I'm going to go over that with you momentarily. So now what we need to go through and do is to set up our T accounts. And let's go through and do this over here. We'll go ahead and hide these columns. So what I'm going to do now is I'm going to use T accounts right over here. And I'm going to kind of start over here. I'm going to make a big T account for cash. And I'm just going to kind of leave this alone for right now. I'm not going to put in those dollar amounts. I know that the total increase of cash has to equal 300, but we're not going to be focused on that right now. But what I am going to do is I'm going to put into my T accounts my opening and ending balances. My accounts receivable, which is, again, has a debit balance, right? It's an asset. Assets are increased with debits, decreased with credits. It's typically going to have a debit balance. Over here, ending balance as of 12/31/20 was 150. For my liabilities, I only had accounts payable. Account payable, a liability. It's an obligation that typically has a credit balance. Opening balance was 100. Ending balance was 250. Common stock par. This is part of owner's equity. Equity typically has a credit balance. Over here, beginning of 1, ending of 1. Additional paid in capital common stock. Again, this is an owner's equity account, beginning of 199, ending of 199. Retained earnings are how our net income gets into the balance sheet. Over here, retained earnings, part of owner's equity, opening of 50, ending of 250. So we're given a balance sheet. The first thing we're going to go through and do is we're going to set up the T accounts, right? So after we do the skeleton, which is right over here, our next step is going to be to put in the T accounts. And we're going to go to every balance sheet account. And that's what we're going to go ahead and do. So we're going to create T accounts for all the balance sheet accounts. That's what we've gone through and have done. Now, the next thing I need to do is deal with the additional information first. And let's go through and read this. It said that Panther Inc. had 200 of net income for the year ended December 31st, 2020. Now, when we're dealing with net income, where does net income go on the balance sheet accounts? Well, if you remember our statement of retained earnings, right? What did I start with? I had beginning, retained earnings, right? What increases it, right? So my beginning plus my net income minus any dividends is going to give me my ending retained earnings. So if we translated what we do on the statement of retained earnings into a T account, beginning retained earnings, net income, reduced it by dividends, and this is going to give us our ending retained earnings. So it tells us over here that Panther had 200 of net income for the year ended December 31st, 2020. So where would we put net income? Well, if I had 200 of net income, I would put this over here at retained earnings. So now what I need to go through and do operating, investing, and financing. These are the three sections that I need to go through and put here on the big cash T account. What does this represent? It represents net income, right? So what section does that go into? Does it go into financing? Well, financing is only if we're buying or selling our own stock, issuing debt, paying a dividend, not applicable. What about investing? Are we selling equipment, buying equipment, selling intellectual property, buying a business? Selling investments? No. So it's going to come over here. And what we're going to do the opposite to cash, right? So if we're crediting retained earnings in this particular case, we're going to debit cash and we're going to call this net income. And if you look at our friends at the Home Depot, net earnings of $12,342,000,000, you'll basically see over here net earnings $12,342,000,000. So you're starting with your net income. So this is where this is going through and coming from. Now, there's no other additional information. As I said before, I kept this question very simple because I don't want us to go through and stress you out. So I'll wait for a little bit later to do that. Okay, so we've dealt with the additional information. Now what we're going to do is we're going to reconcile all of the T accounts so that they balance. So what I'm going to ask first is we'll do the easy ones first. Is common stock par balanced? Does 1 plus 0 equal 1? The answer is it does. For additional paid-in capital common stock, does 199 plus 0 equal 199? Correct. There's nothing we have to do here. So this over here, I don't have to do anything with these accounts. But let's go to look at accounts receivable. How do I get from 100 to 150? Do I need a debit or a credit? Well, here I'm going to need a debit of 50. Okay. So what I'm going to do is I'm going to do the opposite to cash, right? What section does it go into? Is it anything related to the sale or the financing of my operations? The answer is no. Does it have anything to do with selling equipment or the like? The answer is no. It's going to go into the operating section. And over here, I'm going to do the opposite to cash, or I'm going to credit cash over here for 50. Now, very important, when it comes to describing what happened, AR went from 100 to 150, right? Accounts receivable is an asset. If I debited an asset, how do I increase an asset? I increase it with a debit. So over here, this is going to be called an increase in accounts receivable. It's an asset. I debited this over here. So I'm doing the opposite to cash, but my description is going to come from what happened in the T account. Let's take a look at accounts payable. For accounts payable, I went over here from 100 to 250. What do I need to do to get this to balance? Well, I'm going to need a credit for 150, right? 100 plus 150 is 250. So over here, I'm going to do the opposite to cash, right? So over here, I'm going to debit cash for 150. Now, when I come down over here, accounts payable is a liability account. It typically has a credit balance, and it's increased with credits and decreased with debits. So over here, this is going to be an increase in accounts payable, right? So this is why I like doing with the T accounts. So I've reconciled all of the T accounts, retained earnings, common stock at par, additional paid-in capital, nothing happens, so I don't need to do anything. So now when I come over here to my statement, to my cash T account, I have over here 350 of debits, 50 of credits. When I subtract the smaller from the larger value, I have an ending balance of 300, right, as a debit. What is this? This is total cash provided by operating activities. If it is positive, it is going to be provided by. If the amount was negative or it had a credit balance, it would be used in. Now, let's go through and review this again. Let's go through all of the steps. First step here, I set up the skeleton, right? I went through over here, set up the skeleton. Very important. Operating, investing, and financing. I did this anyways, even though I have no investing or financing activities. Coming over here, I then have my total increase of cash, 250 to 550, 300 plus my beginning cash balance. Gives me an ending cash balance, and I'm going to leave a space down here for my non-cash transactions. So, which we don't have any. So, but coming over here, I'm now going to have over here, I went through, put in, so that's the first step. Second step, I put in the beginning and ending balances of the basically of the balance sheet accounts, with the exception of cash, into the T accounts, right? I then dealt with the additional information first, right? I dealt with that net income. And then what I did was, with the net income, if I'm crediting retained earnings, I'm going over here and then I'm debiting cash. Accounts receivable. Over here, I'm doing the opposite to cash. Over here with payables, I'm doing the opposite to cash. So over here, when it comes to the description of the item, I describe what happened in the T account. Net income, a increase in accounts payable, right? It's a credit, it's a liability. 50 over here, an increase in accounts receivable. So this is giving me total cash provided by operating activities. So when it comes to going through and preparing my statement, I'm actually kind of in luck. Why am I in luck? Well, the total amount of the cash provided by operating activities is my total increase in cash. So I know I've done this correctly. So the last thing we're going to go through and do is that once we've gone through, make sure the large T account is balanced. It is, it equals 300. I'm now going to go through and input the different items over here. So I'm going to have net income. Now, when I'm doing this, if it's a debit, it's going to have a positive amount. If it is a credit like this one, which is an increase in accounts receivable, because this 50 is a credit, I'm going to show this as a negative amount. Over here, an increase in accounts payable, I'm going to show this as a debit. So my total blank operating activities, this is going to be, because it's positive, not negative, this is going to be provided by operating activities. So my 300 equals my 300 right over here, and we can kind of move things around to make this a little bit more clear. Okay, so right over here, investing, financing, we're both 0, right? Why did I go through and show sections where I didn't have to? Because I want you to get into the habit of, when you do these questions, you follow a very, very methodical process. And this is how we go through and do it. So that's our first cash flow question. I want to thank you for watching and being here with me today. If you have any questions, thank you for liking and subscribing. If you have any questions, please feel free to email me at 1812cpa@gmail.com. And I look forward to seeing you on the next video. Have a great day.